would now like to touch upon financial stability. The domestic financial system remains resilient with healthy balance sheets of banks and financial institutions. The financial parameters of non-banking financial companies, that is NBFCs, are also improving in tandem with those of the banking system. Good governance, robust risk management, sound compliance culture, and protection of customers' interest are of paramount importance for the safety and stability of the financial institutions as well as that of individual financial institutions. The Reserve Bank lays great emphasis on these aspects. We expect the regulated entities of the Reserve Bank to accord the highest priority to these functions. External sector is the next area on which I would like to touch upon. India's current account deficit declined sharply to 1% of GDP in the second quarter of 2023-24, that is second quarter of the current financial year, from 3.8% in the second quarter of the previous year. Going ahead, the net balance under services and remittances is expected to remain in large surplus, partly offsetting the trade deficit. India's services exports remained resilient in October to December this year, driven by software, business and travel services. Moreover, with around 10.2% share in world telecommunications, computer and information services exports, India is a significant player in the world software business. According to the World Bank, with an estimated $135 billion inward remittances in 2024. I repeat, the World Bank estimates the inward remittances for India to be in the order of $135 billion in 2024. Now with this, India would remain the largest recipient of remittances globally. Thus, current account deficit for both 2023-24 and 24-25 is expected to be eminently manageable. On the financing side, net foreign direct investment stood at $13.5 billion in April to November 2023, as compared with $19.8 billion a year ago. Foreign portfolio investment, that is FPI investment, witnessed a sharp turnaround during 2023-24, that is current year up to February 6, with net FPI inflows of $32.4 billion as against net outflows of $6.7 billion a year ago. Net accretions to non-resident deposits and net inflows under external commercial borrowings were also higher during the current year. As on February 2, 2024, India's foreign exchange reserves stood at $622.5 billion. Vulnerability indicators suggest greater resilience of India's external sector. We are confident of comfortably meeting all our external financing requirements.